Hey guys, a couple people had written me on the weekend and asked me to go over some of my trades from Friday. Um, they wanted to know how I come up with what I write on the watch list, and also how I formulate my plans as far as my trading plan, and what setups or lines I use as far as coming up with my entries and exits. So on the watch list, I basically just traded the stocks that I wrote down. So these were my trades. They were all pre-planned. I already had the idea in the pre-market. So I had JNCE. I was watching 1050 and 11. Never got up to 11, but I traded the 1050 area a little lower than that. And SPAQ, it was sitting on a multi-day trend line. I went long in the pre-market. I was using a stop of 1620. Tesla, I was long biased in general, but in the pre-market, I was thinking it's, at least in the beginning, it's a short, and then maybe later long into support. And then Dave and Buster's, there was an analyst upgrade, but I was short biased and I was looking for 1640. If it got through, it did get there, and I did go short. And then Kodak was looking more like a long to me, even though most common sense would say it's a short, but the way it was trading, at least by 8 o'clock in the morning, I thought it looked more like a long than a short. So first I'll go over Dave and Buster's, and um, just so you know, a lot of my trades are simply based off of trend lines and then horizontal support and resistance lines. And most of these trade ideas, just come from observing price and how it reacts to the support and resistance levels and these trend lines. So on Dave and Buster's, I'll just go through my process a little bit here. So you see me write about broken stocks all the time, and a broken stock to me is a number of things, but basically it's a stock that has broken trend or broken major support on the big picture, and therefore, at least for a little while, it's in sell-off mode, and it should remain weak. But the idea as a short seller is to try to capitalize in the short run, in the shorter time frame, when the stock has a rally or pops up into resistance. So first of all, you see that it's pretty easy to see that there's some kind of visual trend line here where the stock started to come back, got up almost to $20, and then came crashing through this trend line here. So you had a big wash, reactionary bounce, another big wash, and on Friday I traded this because there was some analyst upgrades, and I thought that if we got enough of a pop into resistance area, I'd be interested in shorting. So how I picked that area is basically I look at a higher time frame chart. This is a 30-minute chart. You could use 15-minute, you could use an hour, but you're looking at multiple days. You're looking at the higher time frame. And to me, on the way back up, the first time it gets into some serious resistance is right here. Whoops, sorry. So right at 1644 on my watch list, I picked a little under that. I chose 1640. That's the area that I was interested in. To be honest, I'd be interested in shorting the midpoint of this range up here, so I probably would have shorted higher. But if it got over 1750, then I'd definitely be out. Depending on the price action, if it got past this resistance up here, I might have been out sooner. So, but this was the first area that I was really interested in shorting, and you can see visually on the chart that on the way down, you're not going to start getting serious support until about right here, about 1570. So I marked those areas off. So I'm looking to play a short from this area of resistance into this area of support. Now this is on the 30-minute chart, and I know a lot of you don't look at the higher time frames, but especially with large caps, I always do. And then if we go to the 2-minute chart, then you can zoom in on what actually occurred. And you'll see this a lot where the stock will go past a level, especially in the morning. But I try not to get shaken out. I still try to stick to my plan. But you can see it reacted to that 640 area, came back, broke it. You got some long chasers, and then you probably hit some stops there, came down, hit it again, and then ultimately came right down to that support level. And as we got towards 11 o'clock, it tried one more time, went right up to that same resistance level, and then came later down to support. So that gives you an idea on how I go through my process. And I usually do this with a lot of the large caps I'm watching in the morning, and then try to formulate a plan based on the higher time frame chart. When you're too focused on the lower time frames, then you tend to sometimes get easily swayed by all this random price action, and you can enter at the wrong place, you can exit at the wrong place, and a lot of times it just pays to be patient and ride through it and stick with your big picture plan. So here's another trade I did on Friday, and this is Spartan Energy. This is the 4-hour chart, but I just wanted to show you that the big picture on this is that the stock had run up, came down, hit a support area, and then started trending up. It got a little ahead of itself, and then we had a pullback. I think this was Thursday. But you can see that there's some kind of trend going on here. This is the 4-hour again. And let's see if I can zoom in here. Now we're on the 1-hour. Yup. 30-minute. So what I was looking at on Friday morning was we had what looked like a possible downtrend going, right, before Friday. But then we had, first of all, whenever you draw trend lines, the more recent, the shorter trend line is always subservient to the larger trend line. So this is the major trend line. This is what I call minor trend line. And what I saw was that there seemed to be some kind of triangle forming, possible trend line here, and then you had the major trend line here. So on Friday morning, I was thinking that the stock looked like it was starting to slow down and to get supported by this major trend line. And what I said on the watch list is that if it got to 1620 down here, which would be below this support and below the trend line, then obviously it's not going to work. But the risk reward is good, because if you get in, and let's say you get in at 1630, 1640, and you're risking 20 cents, and you do get a move, then you could easily see 1690, maybe even $17 as your price target, or possibly 1731. So from a risk reward standpoint, it's good. So in general, I like the big picture story on the stock, and it had been down for a few days and it was running into support. So in the pre-market, it just looked like a good risk reward situation. I didn't know if it would pop, but once I committed to a plan, I just stick with it. I put my stop at 1620. I think I moved it up a little bit later, but I just held it. I just figured I'll hold it to the end of the day. If nothing happens, then I'll just close it before the end of the day. But I got lucky and got a pop at the end of the day. I traded JNCE Therapeutics on Friday as well, and the way I view this is it's not so much a broken stock, because this stock is still in a trend. There's an obvious trend here, but I guess this is more of a counter trend trade or scalp trade. But basically what I saw was you had a huge run up Tuesday last week with the big wash, then it consolidated, and I just thought that if it did really have a move up, there's some obvious resistance here at 1040 and 1060. So just roughly I was thinking 1050 area. I think I wound up shorting it in here, and then I was looking for a target at least around this area or back to the trend line again. I traded Kodak on Friday, and I was viewing it as a long. The reason I was viewing it as a long is because big picture, what I saw is stock was beaten down and out. Everybody that shorted it probably shorted it. And then we got some good news early in the week. They hired an outside company, etc., to review their activity as far as breaking the law, and there was nothing found. So anyway, stock took off, had a big run up, and then an obvious reaction pullback. Then it recovered, and then we had another push up, broke highs. Now, if I looked at it real early in the pre-market, it probably would have been thinking what a lot of people were thinking is it's a short, and if it cracks support, I'm going to go short. But I didn't. I didn't start looking at it to close to 8 o'clock, and it had already tried to pull and then bounced again. So I noticed that there was a trend line back here that seemed to line up with that pullback, and it also supported off this area here. So because of the fact that it tried to pull and then it came back up again, and then it seemed to later start forming a trend, to me this looked bullish. I wasn't sure when it started forming this triangle pattern later in the morning. I thought, okay, well, maybe it'll start breaking down now, but it supported. So once it broke this trend line and continued to support, then we pushed up, pulled back. Then this was a long to me. So I went back in long, and then I thought it would push more. Actually, I was hoping for 13, but then once it started pulling late afternoon, then I just got out. But just so you can see my thought process and where I get my lines from and how I view things. And finally, last thing I traded on Friday was Tesla, and my plan in the pre-market on Tesla was to at least initially short, and then I was still bullish on it, so it was short and then buying the resistance. I wound up not buying later in the day just because it's Friday and I was pretty much done. But my thought process was this: when I looked at it big picture, I'm sure you probably see the same thing, but there is a definite trend here, and I also noticed that there's a possible trend line here, possible. And then when I zoomed in, my thought process was that it had gapped up a lot. It had pushed up a couple times between the night before and the early pre-market. And when I started looking at it around 8 o'clock, I was interested if there was another push up, and I thought we would get one by the open. So I was interested in this line here, So what happened was at the open, I believe I entered around here, and there was another push up. I don't get swayed, I don't get shaken out a lot of times just because of the 930 craziness, because a lot of times, as you know, you'll get spikes or whatever because of the huge amount of orders going in. So at least the first like 7 minutes or so, I'll let it go as much as I can. But anyway, my plan was to short into this resistance area and cover into support, which I did. And this is the first obvious area, as you can see here, to cover into support. As the morning went on, we get close to 12 o'clock, I was out. But I could have held it, and I left money on the table because it went down and ultimately got down to a good support area, and it did bounce quite a bit. But that's my thought process. So you can kind of see how I use the lines, how I'm using a big picture trade to manage my trades on a smaller time frame. But with a lot of these large caps, basically I'm just looking at multiple days of data and just noticing where the lines come into play and where the trends are and where the stock should react. The very best reactions happen when there's a horizontal support or resistance line that lines up with a angled trend line. A a lot of times I'll size a little bigger on those trades because it's much more likely you get a strong reaction off those levels. But I hope that makes sense. If you have any questions, just hit me up in chat or DM me in the room, in the VTraders room, or you can leave comments on YouTube if you're watching this on YouTube and you don't belong to the room, or you can hit me up at Twitter, which is at Switterman, by the way, SWITTERMAN. Thanks, guys.